Hello, good morning. This is Mr. Adv A S KHAN from Pune, Maharashtra State, India. Sorry for the gap again between you and me. The reason that kept me away from you is that my sickness. I was sick for some period of time. That is why there is gap. Anyhow, now this session we are going to devote for what you call income on sale of asset, that is capital gain, and in the Supreme Court judgments on them. In this session, what we would do, we discuss two important decisions of Supreme Court, and in next video, which would come in a day or so, you will find there another two important judgments in that video. So, let us start with our two important judgments which are devoted in this session. Please note down the appeal details. Appeal number is 1308. Year is 1971. Date of decision is 20th January 1972. ITR details: year 1972, volume 83, page 714. I would repeat. Appeal number 1308, year 1971, date of decision 2020-1-1972. ITR details: year 1972, volume 83, page number 714. Facts of the case. You know the pattern. First, facts of the case, then nature of dispute, then question of law, then decision, and then justification or reasons for the that decision. This is the pattern we have adopted. So first, facts. And in this appeal, facts of the case are like this. Assessee is in appeal. Assessee is in appeal in this case. Assessment year AY is 62-63. A holding company incorporated in UK advanced loan to its subsidiary company doing business in India. The holding company advanced the money to its subsidiary with the condition that it should, with this money or with this loan amount, it should purchase shares from 3 new Indian companies which are yet to start business at face value, or in other words, issue price, and transfer these shares at face value or issue price only to it, that is holding company, at a future date, which would be intimated by the holding company to the subsidiary company. At future date, the subsidiary company transferred the shares at issue price or face value and filed the income tax return. Assessing officer rejected the issue price of shares and calculated tax on capital gain, taking market value of the shares under section 52 at that appropriate time, that is in 71-72, that section 52. Section 52 presumes, important word, presumed to be noted here. Section 52 presumes, why it is to be noted? It is presumption of the presumption under this section 52. Section 52 presume means this section presume, and which can be refuted or it can be disputed by the assessee or either party. So that is a presumption. Section presumes something that one can dispute or refute. Section 52 presumes that to avoid or reduce tax on capital gain, taxpayers normally show face value of shares and not market value of shares. Then next, dispute. What is the dispute in this case? The argument by assessee side. The argument by assessee side. What he says: shares valued at issue price, not with the intention to avoid or reduce capital gain tax, but the shares so valued as per the agreement with the holding company. This is the argument, or this is nature of, we are studying nature of dispute. So what assessee argues, this I have transferred, or rather I have valued the shares at what you call issue price or face value, not with the object of avoiding any tax, capital and tax, etc., but I have valued in such a way, and not I have valued at issue price and not at market price, to honor the provisions of agreement entered into with holding company. That is his side and dispute. Then what revenue has to say in this nature of dispute? What is the revenue side? Assessee should have valued shares at market price under section 52, which he failed to do so to avoid or reduce capital gain tax liability. So this is the revenue side. Now this is the question before Honorable Supreme Court in this case. After hearing the facts, after hearing both the sides, the question that has come up for determination or decision is like this: whether provisions of section 52 are applicable or attracted in this case or not. This is the question before Honorable Supreme Court. And what decision they have given? Held no. The section 52, the provisions of section 52 are not applicable in this case. Decision is in favor of assessee. Decision is in favor of assessee and against the revenue. This is the decision. And what grounds Honorable Supreme Court has given for this decision or for their decision? So there are 4 grounds. So let us see those grounds. First ground: the case involves question of fact that whether the assessee transferred shares at issue price with the object of avoiding or reducing capital gain tax. The case, first ground for decision is like this. They are proceeding like this. The case involves question of fact that whether the assessee transferred shares at issue price with the object of avoiding or reducing capital tax. This is the question. This is the question of fact. This case involves this one. They are proceeding ahead. Question of fact is decided. Question of fact normally decided based on documents such as agreements, minutes of meetings, notes, etc. Question of fact, please remember, very important. Question of fact is decided based on documents such as agreements, minutes of meetings, notes, etc. Then third ground, in the present case, agreement entered into between holding company and subsidiary company and the minutes of meeting held between the parties which are presented to Honorable Supreme Court clearly show that to give effect to the agreement, subsidiary company transferred the shares to holding company at issue price. This establishes the fact that there was no intention to avoid capital gain tax. In view of the above, the provisions of section 52 are not applicable to the case. That is, these are the justifications or reason given by Honorable Supreme Court for their judgments. Now, this is over, the judgment is over here, but in the same judgment, there are some important things which are of very academic value, I would say, and which would help us, you and me, for our study of taxation law. So, Supreme Court's executive comments on matter of reference to High Court on this subject, Honorable Supreme Court suo motu has given some comments. The jurisdiction in the matter of reference to High Court can be exercised by tribunal. The jurisdiction in the matter of reference to High Court can be exercised by tribunal first, when the point for determination is a pure question of law, such as construction of a statute or document of title. I would read again. The jurisdiction of reference to High Court can be invoked by tribunal in the following circumstances. The first circumstances narrated by Honorable Supreme Court is like this: when the point for determination is a pure question of law, such as construction of a statute or documents of title. Then second circumstances when this jurisdiction can be invoked, when the point of determination is a mixed question of law and fact, while finding of fact by tribunal is final, its decision as to the legal effect of this finding is a question of law. When the point of determination is a mixed question of law and fact, while finding of fact by tribunal is final, its decision as to the legal effect of this finding is a question of law. A finding on question of fact is open to attack. A finding of question of fact is open to attack as erroneous in law when there is no evidence to support it, or if it is perverse. I will repeat this, important. A finding of question of fact is open to attack as erroneous in law when there is no evidence to support it, or if it is perverse. Last, tribunal can make reference to High Court, or High Court can direct tribunal to make reference to it, a question of law. Here ends the what you call the this details of this appeal and judgments, justification, and all these things. This is very important and interesting judgment, worth noting. It's a good guidance for all people like us. Now we would move to our second video. Move to our second, what you call this Supreme Court judgment. So please note down the appeal number. Appeal number is 1146. Year is 1975. Date of decision is 19th February 1981. ITR details, year 1985. Year is 1985. Volume is 128 and page number 294. Now, facts of the case. In this case, revenue is in appeal. Assessee transferred its assets and liabilities, including goodwill, to another firm. Assessee, please listen carefully. Some omission was there from my side. So I would repeat again the second fact. Assessee transferred its assets and liabilities, including self-built-up goodwill. This is self-built-up goodwill. This word is equal to self-generated goodwill. You can say self-generated goodwill or self-built-up goodwill to another firm. Assessee transferred its assets and liabilities, including self-built-up goodwill, to another firm. Assessing officer during assessment decided not to tax capital gain that has resulted due to transfer of self-generated goodwill. After crossing all legal levels, the matter reached Supreme Court to decide whether such goodwill transfer is taxable under Section 45 of Income Tax Act 1961. Whether such goodwill is taxable under Section 45 of Income Tax Act 1961. So, what is the nature of dispute? What assessee has to say? Capital gain on transfer of self-generated goodwill is not taxable under Section 45 of Income Tax Act 1961. Revenue side, it is taxable under above section. This is the dispute. Then what is the question of law before Honorable Supreme Court to decide whether self-generated goodwill on its transfer is taxable or not? Question of law is like this: whether self-generated goodwill on its transfer is taxable or not. Decision held no, not taxable. Decision against revenue and in favor of assessee. Decision is in favor of assessee and against revenue. Now, what are the reasons Honorable Supreme Court has given for their decision? First reason, such goodwill has no price tag. Such goodwill has no price tag. It is without cost because it is not acquired against payment or money. Cost is essential factor for computation of capital gain. Second reason, date of acquisition of asset is also essential. Date of acquisition of asset is also essential factor for computation of capital gain. For goodwill which has taken birth during continuance of business, it is not possible to know the exact date when it has come into existence. It is not possible to know when it has taken birth during the course of business, that self-generated goodwill. Then next reason, if still one so uh, it still want to if still one if still one go ahead to calculate capital gain for such goodwill, the position could be as under. What they are telling, if still one has to calculate what you call this capital gain, go ahead to calculate capital gain for such goodwill for taxation purpose, the without whatever date of acquisition or date of purchase and without the cost of goodwill and without the date of purchase of such goodwill, without these two important things, if somebody still pursues to go ahead, somebody still go ahead to calculate what you call capital gain, then result of calculation would be like this. They have shown like this: full value consideration. That is the formula of computation of capital. Full value consideration. Here some X amount. Then from that we have to deduct less cost of acquisition. We don't know cost of acquisition because this self-built up goodwill. Less cost of acquisition, 0. Then X means some amount, then minus 0, it comes X. Again it comes X. Capital gain comes X. This means Honorable Supreme Court reads this calculation as taxing full value consideration and not capital gain. Very good decision, very good reasons, logical reason. And last one is very interesting. You see, computation formula says that you must know the what you call cost of the what you call this full value of consideration. Whatever money when you sell your self-generated goodwill, you get some money for that. So that is called full value consideration, that it is assumed X. And from that, cost of acquisition or cost of purchase of such goodwill to be shown. Here, self-generated goodwill has no price tag. It doesn't have price. So it is 0 then. Then after deduction, what you get, the X minus 0 is equal to X only. That is capital gain is X. It means you are taxing price received or full value consideration and not the capital gain. Here taxation law says under section 45 and this other associated provisions, they say you must have what you call capital gain for taxation purpose, and that is calculated as above. But here you are taxing price received or full value consideration. So these are the reasons Honorable Supreme Court has given, and they are very interesting. I would repeat justification given by Honorable Supreme Court. Such goodwill has this question of law, whether self-generated goodwill on its transfer is taxable or not, held not taxable, this not taxable. Then what are the reasons? First reason is such goodwill has no price tag. Price tag. It is without cost because it is not acquired against money, or it is not purchased against money. Cost is essential factor for computation of capital gain. Then second reason they have given, date of acquisition is also date of acquisition of such goodwill is also essential factor for computation of capital gain. For goodwill which has taken birth during continuance of business, for goodwill which has taken birth during continuance of business, it is not possible to know the exact date when it has come into existence. So date of purchase or acquisition also not known. Then third important reason they have given, if still one go ahead to calculate capital gain for such goodwill, the position would be as under full value consideration, presume X, then less cost of acquisition 0, because there is no cost of acquisition for such asset or such goodwill. Then next result come capital gain X, that is purchase amount or full value of consideration. So this means we are taxing full value of consideration and not capital gain. When the law says you should tax capital gain only. Then the same judgment, as earlier in the earlier judgment also, there are some what you call educative or academically useful observations or academically useful comments by Honorable Supreme Court. So such comments, such observations, a student must know or note down. Know and note down also important. Their comments and what you call observations. We must to what you call make you more confident in taxation law. Such side comments, side observations by Honorable Supreme Court are very relevant and material. Then we must note down them carefully in some good place. So let us see the whatever they have shared the definition of goodwill. Honorable Supreme Court has shared some definitions of goodwill that are interesting also. So first definition they have shared is, it is benefit of business. Goodwill is a benefit of business coming out of a reputation of business. It is a benefit of business coming out of reputation of business. And reputation of business depends on what? Reputation of business depends on its name, its location, its quality of product or quality of service. So, first definition they have said. Then second definition they have shared, it is like this. It is attracting force. Goodwill is attracting force. Goodwill is attracting force. This is general definition of goodwill, not self-built or self-generated goodwill. These definitions are not pertaining to what you call self-generated goodwill. See, goodwill as a this general term goodwill or this asset, goodwill asset, both what you call purchase acquired goodwill or self-built up goodwill. For both these definitions are applicable. So in that angle we have to read this definition. It is the benefit of business coming out of a reputation of business. That reputations come because of name, because of location, because of quality of product and because of quality of service provided. Second definition, it is attracting force. It is attracting force. Then third definition, it is not definition, but how the people understand or how they what you call think about this goodwill. They are not defining. They are thinking about this goodwill asset. So another scholar has thought like this: goodwill, though immaterial, is materially valued. What this scholar has said, goodwill, though immaterial, is materially valued. Okay, there is scholar has what you call has to say something about goodwill in this way. Then another academically useful observation by Honorable Supreme Court in the same judgment. Let us enjoy that. Enjoy means not entertainment. This no doubt serious, but for students like you and me, this is useful. This is to be noted. Under each head, very important. No? Under each, they are this observation, academically useful observation. They are talking about taxation law and how the legislature has shown the way to read, understand these provisions of taxation for the ultimate or final object of tax collection or taxing for bringing tax revenue to the government. So, how to understand provisions of taxation law, that is important. Just I would read, note down, listen carefully and note down also. Under each head of income, the charging provision is accompanied by a set of provisions for computing income under each head. Under each head of income, the charging provision is accompanied by a set of provisions for computing income under each head. So under each head there is charging provision and there is another side by side there is computation provision. This is the arrangement of the taxation law. What this observation is there by from Supreme Court. Under each head of income, the charging provision is accompanied by a set of provisions for computing income under each head. Thus, charging and computation provision together constitute an integrated code for computation of computing tax under each head of income. Supreme Court says it is an uniform legislative intent that runs for each head of income. A very good observation from education or learning point of view, very good observation. I would repeat again, under each head of income, the charging provision is accompanied by a set of provisions for computing income under each head. Thus, charging section and computation, the charging provisions and computation provisions together make an integrated code for computation of tax under each head of income. This is over. This judgment is over. So, two judgments are over, and I hope you would like this. Here I stop here. We would meet shortly for another two important judgments. Till that time, have a good day. Thank you very much for watching video.